Welcome to Market Structure Part 2. This is the advanced level of the SLK series I started last week. I am Jet Trades, and today I'll break down how real market structure works and why breaks also happen, right? And how liquidity influences direction, not just theory. But this class also will be more of practicals. I'm not going to dwell much on theory, but it's going to be a practical class, right? So I just want to say peace and love to those guys that started this SLK series with me, that watched the part 1 of the market structure video. I love you guys. Peace and love to every one of you. So today I will be talking about advanced market structure. Advanced market structure, how market really moves, right? So if you watched the first market structure video I dropped, which was the basic market structure video which I dropped, you will see what I actually talked. I talked about the different types of market structure we have, and I said we have the bullish market structure, we have the bearish market structure, then we have the ranging market structure or consolidating market structure. But that's not what we're going to be talking about today. Today we're going to dwell on advanced market structure, how the real moves happen in the market, right? So if you watch the first video, you will see what I talked about, how you can know what a bullish market is. I said that a bullish market structure is characterized by market or price forming a series of higher highs, right? Higher lows, higher highs, higher lows, higher highs, then what? Higher lows. This is what I say a bullish market structure is. Then for the bearish market structure, I said price is characterized by the formation of lower highs and lower lows. You see price forming lower highs and lower lows, lower highs and lower lows, lower highs and lower lows. This is just the concept of the basic market structure. This is just the basic form of how price moves. But price does not really move like this, because if price actually moves like this, then every single person will actually be making money from the market, right? Price does not just move in a straight line like this. There are some manipulations that price does. It does this kind of manipulation. You think as if the trend has changed, but it then move up. That's because price is seeking out liquidity. That's the concept of advanced market structure. The concept of advanced market structure is that price takes internal liquidity and then expands to take out external liquidity, right? Price does not just move in a straight line, because if it does that, then every single person is going to be making money from the market, right? So that's not how price move. This is just a way to know how price move, right? This is how price actually move. You see that first of all, price sweeps. It sweeps this low, right? You need to understand that a range begins with a sweep and a low. A range begins with a sweep and a low. So price sweeps this particular low, then breaks structure to the upside, right? Then forms a leg at this particular level, right? It forms a leg at this particular level. So then this particular first leg it forms is known as the what? Internal range liquidity. Then it expands to this upside. Then what we will be expecting from the market is that price will come down, right? Reverse to this downside, take out this particular liquidity. This low will be acting as an internal range liquidity, right? So price comes, takes this particular internal range liquidity, react from a key level, then what, expands towards this to the external range liquidity, right? So it expands to the external liquidity. Then what do we expect price to do? It then seek out liquidity, right, again. Then at this particular time, price now engineers its own liquidity, right? It engineers its own liquidity. Then this becomes the internal range liquidity. Price then what, come down to look for a key level closer to this particular liquidity, react from it, then expand towards the external liquidity. This how the real move happens, right? This is how market moves. This is how price moves. This is just how price moves, right? Are you getting it now? So price will always what, first of all, sweep, right? So price sweeps this particular level. Most of the time it then forms this particular low. This particular low is known as the A, you can call it the A leg, right? So it forms that particular, it's known as a strong level, because we actually don't expect price to what, come and take this particular low, because this low is acting as a strong level. Then price breaks structure, or it broke structure from this level, then forms an internal liquidity, right? Forms an internal liquidity. Then this is known as the B, should I call it B point, right? So this particular point is known as the internal range liquidity. It is not a strong level, it's a weak level, because that is a liquidity level, because we expect price to take it out, right? Then expand towards the what, external liquidity, which is this particular level. Price expands towards this external liquidity. Then price forms its own, or engineers its own liquidity at this level, comes and take it out, then what, expand again towards the external liquidity. This is how price move. This is how price move. Price always seek liquidity from the internal level, then go on to take out liquidity, or expands to take out external range liquidity. You need to understand this, and once you understand this, it's going to help you a lot in the market, and it's going to help you make good decisions, right? That will eventually lead to what, good trades and more wins, right? So price always seek to do two things. Number one, price always seek to do two things. Number one, price always seeks to take out liquidity. Then number two, rebalance and hold imbalance. That's the basic things price what seeks to do. Number one, take out liquidity. That is, takes out liquidity from the internal range, then expands towards the external liquidity to go and take it out, right? So once you need to understand something, that after price takes out the internal range liquidity, what you are now expecting from the market is that price will start an expansion. It will start a movement called the expansion movement, right? So price takes out internal liquidity, then it begins its expansion towards the external liquidity. So after price takes out the external liquidity, what you need to expect as a trader is that you need to expect reversals. So anytime at all in the market, when price always takes out, or when price takes out external range liquidity or external liquidity, what you now expect from the market is that the price will reverse to what, a particular level that has internal liquidity, or it forms or engineers its own liquidity close to a key level. Then price takes out that internal liquidity, then expand again towards the external liquidity to go take it out. This is how price moves. This is the market mechanics. This is how price moves. So once you understand this, you are going to be saved a lot from unnecessary losses. You stop taking some unnecessary losses that doesn't matter, right? Although market structure is not the only thing we look out for. That's why it's called SLK. Structure first, then liquidity second, then your key levels, right? So, and you need to understand that once your key level is right, then momentum will always kick in. So I'll talk more on that once we get to that particular part, which is going to be on what key level. So without wasting much time, let's go on to the chart and let me show you real market examples, because I don't want this particular video to be long. I just want it to be 20 minutes or 20 minutes plus, right? So let's go on to the chart. Let me show you real chart examples of how price actually moves, right? All right, if this is USD card on the 4 hours time frame, so we'll be interfacing between our line chart and our candle chart. So if I go to the line chart, I'll see something like this. What am I seeing from the line chart? This is what I'm seeing. I'm seeing this particular level as a lower high, lower low, lower high, lower low, right? High, low. Then what did I see now? I saw what? A break at this particular level. So there was a break of structure at this particular level. This particular level gave us a break of structure, and it seems as if this particular level was a sweep of liquidity, because this was a lower high, a lower low, a lower high, a lower low. Then after this, price broke structure. So this is a sweep of liquidity. But if you go to the candle chart, that particular level does not look like a sweep of liquidity, because this is actually where the sweep of liquidity is. So after this particular sweep of liquidity at this level, what we saw price did, advanced market structure. What we saw price did from this level after that sweep was that price broke this level. There was a break of structure at this level, right? After the break of structure, look at this. Pay attention to this very well. Pay attention to this. What did we see? A single candle liquidity. A single candle. Sorry, I'm sorry for that. I'm not teaching liquidity. I'm teaching advanced market structure. A single candle liquidity. This was a pullback, right? So this particular level was the was a low. Look at what I'm saying. This was what price actually printed at this level, right? Lower high, lower low, sweep of liquidity, right? A sweep at that particular level. This is advanced market structure. Price broke out, formed this particular low here. Price went up again, then what? Came down. Just the same thing we talked about before price then expand towards the upside. Then price went on to take out this external liquidity, right? Not just that particular level, and this other level acting as also an external liquidity. You could see how price took all those levels out, right? So advanced market structure. This thing is as simple as ABC. If we go to the line chart, you're going to see, it's this particular level, because the line chart only focuses on the body. It does not focus on the wick. So this is actually the level that price took out, right? This was the level. This was a low that price took out. So what price actually did at that particular level was that after the break from this side, after the break, this low was formed. So it was just as if after this break, this low was formed. This particular low was formed, then a high was formed, then price came back, took this low out. Advanced market structure. Pay attention. This is advanced market structure. So after price took this low out, then price expand to take out the high and also take out this particular high. That was how price expanded towards the external liquidity. That's how simple it is. If you understand advanced market structure, you won't be caught up in unnecessary losses, and you won't take all those unnecessary losses you actually used to take, right? So another thing here coming, let me look for more chart examples for you to actually explain advanced market structure. Something here, I'm seeing something here, right? So what do we see? This looks more like an engineered liquidity, right? So we saw something here, we are seeing something here. Price formed this low, right? Broke to the side, forms the external liquidity. Then what do we see price do? Price formed this particular low again, right? From this lower high, then price took this particular advanced market structure. Price took this low out, then broke to this upside, right? Okay, see what I told you about. I told you about something. So pay attention to this. After price took this level out, this is internal range liquidity. So after price took this particular internal range liquidity, what you now be expecting is what? An expansion towards the external liquidity. We are now expecting expansion to the external liquidity, and that's what we got. But pay attention to what happened in between this particular level here, in between these levels here. Pay attention to what happened. This is what actually happened here. What we talked about the first time was that price will first of all what? Form a low like this, right? Most of the time price forms a low, takes this particular low out, breaks structure, right? Then forms an internal range liquidity, then take out this, then we expect price to come back down, take this internal range liquidity, this particular low, this weak low acting as internal range liquidity. We expect price to take this particular low out, then react from a key level closer to this internal range liquidity. After price reacts from it, what we then expect price to do is for price to what? Expand towards the what? External range liquidity. And where is our external range liquidity? This high here becomes our external range liquidity. Same thing price did here. What are you seeing here? What are you seeing? Price first of all took this low out. Then what we saw price do or did was that price presented a break of structure at this level, right? Price presented a break of structure at this level. Pay attention to what I'm teaching you. After price presented a break of structure at this particular level here, what we saw price did was that price then formed a low. Let's go back to the line chart. What do you see? Price formed multiple lows at this level, closer to that level. So this last low was where the liquidity was actually seated, because line chart only focuses on the body of the candlestick, right? So if it were to be the wick, then we would say that this particular level was the level acting as what? Our internal liquidity. You can call this particular level as the low. You can call this level the internal liquidity, because there were many liquidity here. That's internal liquidity. And also this particular level was also acting as what? An internal liquidity. Pay attention to what I'm teaching you. So after price we took out after price took out the liquidity, price reacted from a key level closer to that liquidity, and what we expected or what we saw price did was that price then what? Expanded towards the external. After price took out this liquidity, what we now saw price did was that price expanded towards the what? External liquidity, which was this particular level. So that's basically how advanced market structure is. I told you something, I taught you something, that the lower, if it's an uptrending market, because you could see that price was actually uptrending at this level, price was uptrending. So I told you that the low can function as what? Number one, it can function as internal range liquidity, or it can function as an internal liquidity. Then number two, it can also function as a structural point. And after price takes out that low with a body and a close, what we are now expecting price to do is now for price to what? Change its bias. Price is not going to be bullish anymore, but price is now going to be bearish. That's how simple it is, right? Advanced market structure. Same thing price did here. After price took out that particular low, what do you see here? Advanced market structure. Advanced market structure. Price formed this low, then took it out, right? Advanced market structure. Let's go to the line chart. It's because we are actually on the 4 hours. I would have taught you what I will teach you what single candle liquidity is, but not in this particular video. What do you see here? Advanced market structure. After price broke to the downside at this level, after price formed this particular something like this, swept this liquidity, price broke to the downside, we saw price formed this particular lower high, came down, this level now serving as what? The external liquidity. This level serving as external liquidity. What do you expect price to do? We expect price to what? Take out internal range liquidity. This particular level serving as internal range liquidity. What did price do? Price took it out, right? So after price took that particular internal range liquidity, what do you now expect price to do? Price then what? Expanded towards the external. So after price expanded towards the external, then you expect what? A little reversal. And that was what price did at this particular level. Took out liquidity again before it would then dropped. That's advanced market structure. Advanced market structure is as simple as ABC. If you understand advanced market structure, although there is nothing, should I say there's nothing like advanced market structure? I don't know how to put it, but you need just to understand that price does not move in a straight line. Price does not move in straight line, right? Price does not move in straight line. If it's actually moving in straight line, then every fool, I'm sorry to use that word, every person, a person that is not even okay can come into the market and it can make money, right? Can make a lot of money from the market. But price does not move in a straight line. If you understand advanced market structure, you will not be caught up in what? Unnecessary losses. So I think this is where I will draw the curtain for today. I hope you learned a lot from this particular session or this particular video we just did, or I just did, right? So the next topic I'll be talking about is going to be liquidity. I hope you get yourself prepared and get yourself ready, because it's going to be a lot. It's going to be a lot. Hope you enjoyed this, and I'll see you on the next video, right? Bye bye guys, take care.